can't. I'm trying to remember what I did was for all of you that are here today. What I did was, I mean, I guess I did it last weekend when I had my actual trading statement up. I showed what happens is to the point that I made earlier that sometimes these trades start out as losses. If you're even if you're on the right side of the trend, because what happens is you get like the initial two-bar break. So I guess you know what, that's what I'll do. I'll go back to the one here. Give me a second. And where are we? Okay. Like this trade here, I recall specifically that, I got into this trade, excuse me, and I was going ahead, and at one point I was losing, and I was going ahead, of course, I added more contracts in, but as you add some of the contracts in, I added more down in here, and some of those were losing contracts in the scaling, because when it rolled back up, it went ahead and obviously it was above the price where I shorted more. But since some of them were shorted earlier on and at higher levels, the net result of that trade was that I won. That was right. And why did I take it? Well, I was on the right side of the trade here. This is a downtrending moving average. I had my speed lines with me here. So we had the two-bar break and we had the pullback. But what got me into the trade, of course, was the two-bar break. As I told you, I trade a little more aggressively. So I started going and shorting it. But as we were shorting some of it, then it started moving back up. I shorted then a bunch more at the higher level, and so it went ahead, and then as it pulled back down, I went ahead and got out of the trade with a large number of contracts with the profit and made money on the trade. So that's an example, though, of how when you're scaling in, not all of your scaling. And so in last weekend's webinar, I actually showed that. And Todd, you certainly recall that, right? I mean, I know at least you were in the last weekend's webinar.
Yeah.
Okay. So, I showed my actual trading statement, all the actual entries for the trade, that were taken, and how it was actually going against me 2 or 3 points, what I'm looking for, and keep in mind, is that I'm looking to go ahead and short up until a specific point. In this case, it's either the downtrending 20-period moving average or the downtrending speed lines is where, depending on how confident I'm feeling with the trade, is where this trade's going to come to a screeching halt if I'm wrong. So I'll scale in, and then if I didn't hold it till over here, I'm just letting you know, but if I'll determine my point where I want to get out. In my case, I got out this particular time at the speed line level, not at the 20-period moving average level. But I'll scale in until I feel confident that I've got enough trade and that I've exhausted the potential opportunity for gain off of that trade. So, but not all of the scale in will be a winner, more or less by default, unless you happen to get into a trade right here and it just starts falling to the downside. And you just finally say, wow, it fell so much, I'm just going to get out of it. But if you're actually scaling in quote unquote properly, or how it will usually work out, you'll scale in, and then it's going to go against you a little bit up to a falling resistance level in this case, and then it will resume its trend to the downside, but you've added in, and so your average is at a higher average. And as you recall, I repeatedly mentioned that last week, was the key is to be on the right side of the trade, which I mentioned over and over and over again. How do you know that? One of the clearest ways I can demonstrate that is which direction is the 20-period moving average trending. So there you have it. Todd?
Okay. Yes. And the next question, a number of people asked that you pretty much answered, but I'll read it for reading's sake here, is until what point do you keep scaling in and then rethink with a cool head, say to yourself, well, this trade probably not going to work out for me, and get out at a loss? So
Okay.
you more or less answered.
Yeah, I already answered that. Basically, when it goes against my, the two key things that I'm using for the scale-in strategy for me in particular is this downtrending 20-period moving average, or the downtrending speed lines, and the downtrending 20-period moving average. And if it's basically gone beyond the downtrending 20 moving average and closes above that up in here, as far as I'm concerned, it's a failed trade. It's what I expected to have happen isn't happening. If I'm expecting a trend to continue to the downside and I have a powerful bar above it that closes above my key resistance level that was giving me all my downward momentum, that's just too much risk for me. So something potentially has fundamentally changed, potentially a news announcement. And since, news will hit us at least a few seconds generally after the real market, by the time I figure out it's a news-related event, it could go against us several more points. They could have found Osama bin Laden. They could have signed a peace agreement with Russia, and Russia is going to move away their nuclear missiles subs from our ports. Something to make things go up, or another London bombing attack, as we saw, and or the 9/11 terrorist attacks, and how things can sell off sharply. As a result. Now, of course, 9/11 was pre-market, but you understand what I'm saying. So the point being that by the time we know what caused that big bar to go the opposite way, we may end up having a couple more big bars. So I'm not going to go ahead and second guess what the market's telling me. I expected to have it happen, expected to have it go down, and if it turns around, closes significantly up over my resistance level, I'm gone. Todd?
Okay, now we're going to move on to stops. Stops, when, how much, this person makes a comment. Many in the chat room say they don't use stops, which I don't know who those people are, but they should be, and how to use them. Very important information for most of us, and I concur with that.
Okay. Could you re-ask the question?
So I think the answer to this question would be your explanation of your ratio. How many points you want to get for, like a 3-to-1 ratio or something like that.
Yeah.
Where to place your stops.
So the part about the chat rooms was irrelevant, I guess, because the comment
it was a comment, and it was just a comment he made, and I would like to know who those people are.
Oh, okay. Yeah. Well, I'll say this though. One of the problems I see with chat rooms is, that a lot of these paid chat rooms, what happens is you'll hear these people go ahead and they'll say, okay, you got to have big stops. This is a professional's game, and you got to have big stops, okay? But then you'll hear sometimes the same people going in and saying, okay, it's never too early to take a profit. It's never too early to take a profit. And it's like, wait a minute, how do you let a trade go against you 5-10 points in these paid chat rooms and then turn around and go ahead and take a 1 or 2 point profit? I don't get that at all. So then to follow up with that, and to your point, Todd, I've actually did 2 little mini free webinars, if you will, on YouTube on stops and that, and I talk about those ratios a little bit. For your average trader, who's having a tough time of it, if your win-loss ratio, if you win more than you lose, you can be more flexible. 1-to-1, stops or losses, things of that nature. But if you're going to go ahead and if you're losing more than you're winning, you probably better not have, 2-point profit targets with 5-10 point losses. So my comment would be that it's very subjective. Stops, a lot of it depends on your win-loss ratio. I can be far more aggressive with my stop placement because my win-loss ratio is higher. And in part, that's because of the scaling techniques and everything else, so that even when I'm wrong, I can usually bail myself out of trouble. But for your average trader who goes ahead and decides he wants to short after the market's already moved down, 15 points and then gets caught in the retracement, or, same thing over here where, you're shorting here, then you get on the wrong side. I mean, there was one trader yesterday who made the comment, I bought all the tops and sold all the bottoms, I think was the trader's comments yesterday. That's a person that probably better have, tight stops if they're not going to go ahead and honor the rules of buying at support and, selling at resistance. So, which is really, kind of more what I try to, methodology I try to teach, more trend trading. Um, and so stops are very subjective to your individual risk tolerance. Some people, they see a 4 or 5 point loss, and I've actually seen people freeze up. They don't know what to do. They're looking at their screen. They're seeing they've lost, depending on the contracts they're trading, X number of hundreds or thousands of dollars. And they're like, oh my God, I can't take that loss. What do I do? So what they do is they sit there and they just hold it. They cancel their stop and they hope to heaven that it's going to come back. And so stops, first of all, my comment about stops is you must honor them. When you put a stop in initially, it's usually with a cool head. When you get very emotional and you want to remove your stops once it starts going against you and you realize, gosh, I'm losing money and I'm about to lose money for real and take that loss if I don't cancel that stop. But you can't cancel your stops. You're not going to be in this business very long if you go canceling your stops. And then the other thing is, as far as the ratio, how much do you let it go? Well, you got to ask yourself, okay, am I a scalper? Am I trading for 2 ticks? Well, if you are you going to let it go 5-6 points against you? So if you're a scalper, no, you're not. How much profit are you seeking on your average trade will help you determine how many points you should go ahead and risk. And I would strongly encourage everybody here to consult a registered financial representative on that, because it's subjective. I'm going to do something different than most of you. It depends on your capitalization. How much money do you have, frankly? Can you afford to let something run against you? I told you I'm hearing some of these horror stories, if you will, about some of these people, and I've got the letters in writing, how these people were with gurus. They were with these, people. They paid them $300, $400 a month. They lost it, and the one guy came to me, and he was down to his last $3,000. His last $3,000. Now, are you going to go ahead and start taking 5-point stop losses on $3,000? Your broker is going to call you and say you're done pretty darn quickly if you are. So a lot of it's how capitalized are you, how successful is your win-loss ratio. Those are some key factors that you need to keep in mind. And also, can you afford to implement the scaling strategy that I have been discussing? Because that will obviously dramatically skew the results, because even though you're wrong initially on some of your initial entry, by the time the trade's over, you can be very right on the trade as you scale in, as long as you're on the right side of the overall direction, as we talked about. If you're shorting in this direction and you're buying in this direction, you're on the right side of the trade. So even if you short here and it goes back up against you a little bit, and then you sell your next ones off at the falling resistance, you're on the right side of the trade. But if you're buying right here because you think it's starting to break back out above this downtrending 20-period moving average, well, you better not be buying more here, because you're on the wrong side of the trade. So it all depends on those key factors, and I can't emphasize that enough. There is no magic bullet. There's these general guidelines kind of that I outlaid in my previous free YouTube videos, and we can get you the dates on those if anybody's wondering, if you haven't already seen them. But as far as, in the real world of trading, though, it's very individual. Stops are very individual, but stops are an absolute necessity. To go ahead and trade in these markets, especially the volatile markets that we have, when we're constantly at risk for terrorist attacks, government economic news, and which way the wind's blowing for any given day of the week, which country is causing an uproar for us again. It doesn't matter where you are. If you're in Europe or anywhere else, if you're trading the American markets, you're affected by what other countries are doing, with the American economy and such. So, your stop is in when your stop is in. You going ahead though and reacting to a news announcement you'll never get out of a news announcement as quickly as your stop will get you out. So at least with your stop, you got your finite risk. You know what your risk is. And so for anybody to sit there and tell you, don't use stops, that's madness. And I can't emphasize that enough. It's absolute madness not to have a stop. So, Todd?
Okay, another stock-related question is, and it's kind of an interesting question, is it's said that, or is it true, that stops are generally hit because of bad entry? Do you agree with that?
Yes, I do agree with that. I do agree with that. And the reason why I agree with that is because what happens is, in fact, as I recall, I'm the person who said that. I'm the person who said that on my YouTube video several months ago, and I noticed some people have been saying that since then. So I hope that's something you learned from me. But absolutely, what happens is, and this goes right back to the whole thing we were talking about the gentleman who came into the chat room yesterday and said, I've bought all the tops and sold all the bottoms. What happens with these entries is that you've got this whole downtrending market here, right? So what happens is then all of a sudden it's going ahead and trading sideways, and then it starts to make a mad rush down. Let's be honest about it, okay? How many of you, you know what? I want to raise the hands this time, please. I want everybody to be honest with me here. How many times have you gone ahead and watched a move in the direction of the trade, 5, 10, 15 points, and then you went ahead, you did nothing all along that way, and then all of a sudden you had the mad rush down, one final big blow-off bar, and you got sucked into that because you said, I'm not going to miss anymore, I got to get in, and you just, something in your mind said, I've got to go ahead and get into that trade. How many of you have done that? Okay. Yep. Exactly. That's what I thought. Because you know what? I've done it. All right. And I just know that if I've done it, that probably means the majority of you, if you're trading real money, have done it too. It's a natural human reaction to go ahead and be sucked into a move like that. Now, let's talk about that for a minute. So what this means is that you've gone ahead and you missed the majority of the move. All of a sudden you get sucked into a blow-off bar, okay? Well, here's the beauty of that. Normally, I'm able to keep myself out of trouble as a rule because what happens is when I get sucked into the blow-off bar, I go ahead and if I put, let's say, a couple contracts in there, and then it starts to rally back up. Well, what happens with the blow-off bar? It usually reverses back against you and then makes another run back down again for all the people that didn't get sucked into the blow-off bar the first time. With my scaling strategies, it scales back in to the falling resistance still at the time. Even though it's a blow-off bar, I'm usually able to go and get enough contracts in here, and then when it falls back down for the second run, I can get out and either scratch or make a small profit. But in the real world, the average trader is going to do this. They're going to go ahead and they're going to throw all their money into this right here, down in this area somewhere, whatever contract size they trade, okay, they're not scaling in, okay? They're going ahead and just dumping it in. They're like, sell the boat, market order, and you're getting filled right down in this area, and look what happens. So now you're filled down here in the 1185 area. This market goes up. You better have darn well had only a couple point stop, and the market goes up. Well, by the time it's gone back up to here, it's moved against you 3 or 4 points already. So you're stopped out. So what I'm saying is that, entries, it will go ahead and, in fact, you know what? Let me give you another example here, which was a real world example from yesterday. Not for me, but Todd, I think you just mentioned this a little bit ago. This market started to reverse to go to the upside. The 20-period moving average was rising to the upside, okay? But if you bought here, you were buying right at a resistance level, and you were buying, over like 7, 8 points away from the rising support. So if you went ahead and did this, you bought at resistance and bought away from the support, what's going to happen? You go in all in with all your size, you're going to get stopped out. You better have. If you got 8-point stops, you're not going to be, probably around long enough to attend one of my next webinars. So, what I would say is poor entry. You go ahead and you take an entry after it's moved several points away from your rising 20-period moving average, giving you no support. You got nothing but air in here. And you're buying at the resistance level because it looks enticing. After we've been trading up for several bars, we look like we're breaking the resistance, which, as you guys know, I told you this was not a break of the resistance yesterday at this point yet. And yet you buy into this because it looks very enticing. Sure enough, pulls back down. You get stopped out. So was the trade bad or was your entry bad? Well, the entry was bad because the overall trend, the trend was right. The trend to the upside was correct. Your assessment there was correct. But your entry was wrong because you did it 8 points away from a support level and you bought into a resistance level. So what's the right trade? The proper entry is to wait for a pullback to, a support level and well away from a resistance level. Hence the 20-period moving average here. So the entry was bad, not your assessment of the overall trend. So do I think that people most of the time get stopped out because of poor entries? Yes. They get sucked into an emotional response. I mean, that's what these markets do all the time. The markets go through one of my support or resistance levels, one bar, and then they turn around and reverse. Guys, all you got to do is look to my chart right here. How many times do you see it? Right here yesterday, even with the mega rally into the close, you had people, you went just slightly through. Look at that. As you know, my top level there was 17 to 20 resistance level yesterday. We traded a couple ticks above that, and then it turns around and drops right away over 5 points. Okay, here, same thing, over and over. One bar thrust throughs, like it's going through my level, only to turn around and fall again. So hence that's why my support or my breakout strategies are so important for the average trader, because of the fact that you're far more probable, your probabilities are far more in your favor if you wait for the 2-bar break than the 1-bar, because there's too many fake outs. These are the fake outs that people with those needs to make money get sucked into. Oh, I missed this. I missed this. I missed this. I'm not doing this again. I'm not missing this. This is breaking 1220. I'm not going to wait for this. I'm in this trade. You go into the trade, you turn around, it drops against you 5 points, you're stopped out, and then the worst, of course, of all worlds is you get right back in and do it again because, like, okay, I was wrong here, but now I'm right, and it turns around and does it to you again. And I know that's happened to probably the majority of you if you've been trading for any length of time here. It's a natural human reaction. I've done it in the past too. But you got to learn from those mistakes. You got to develop discipline to take the trades closer. And will you miss trades because of that? Yeah. Will there be the times where it just goes right through this, that it truly just breaks through this bar and keeps going up, up, up? Yes, there will be those times. But is it worth it to try to get sucked into all these fake outs only to go ahead and lose a bunch of money for the one time or for the few times where it'll just keep going and going rather than waiting for a pullback? I submit to you, and you guys have developed a sense for my style. I'm very patient in the chat room there. I spend more time telling you guys where not to trade than I tell you where to trade, because I think that's very important to your learning and your growth. So yeah, keep that in mind, that poor entries are going to go ahead and lead to stops. Todd?
Okay, that was a very nice answer. Next question is, how much profit before you move your stop to break even?
Well, okay, you know what? That's subjective. Let's go ahead and let's look at it this way. Where's my next resistance level? Okay, guys, that's what you got to ask yourself. I've taught this in the YouTube videos, and it's the same thing I'm going to go ahead and say here. If we broke a support level here, and we pull a resistance level, and we pull back to support, and I start entering here, I see the next resistance levels up here. I might let it run 5 or 6 points before taking profit and then moving the rest to break even. If I've gone ahead and gone long right here, somewhere in this area, okay, let's say I consider this a 2-bar break. More importantly, this was actually a broken finger, so I take the trade at the close of this bar right here. The support level or the resistance level this time is only 2.5, 3 points away. So I'm looking, where is my next support? Where is my next resistance level in relation to my trade? And then the rest of it will get moved up to break even. Use that as your guide. Todd?
Okay. Next question is, how do you determine where to place stops at the last resistance, 2 candles behind? Those are like examples, I guess. So yeah, that kind of, you already answered that. It's just being asked in a slightly different way.
Okay.
I think they're looking for physical barriers or to place them behind, like MAs or broken resistance levels.
Well, okay. Well, we talked about physical barriers as far as like the moving averages. If it breaks it, I mean, there again, I'm looking usually at the close of that bar. So that bar may close 1 point or 2 points above that bar. That the bar is going to determine that. What's key there is to note I think what people are looking for, if I'm reading that or hearing that question correctly, is you short here. How far above this bar, maybe or so, do you let it go before you get out? I think is what I'm hearing being looked for.
Yeah, that's my understanding too. It's basically using a support line or a resistance line to a barrier.
Well, but there again, we just and so we kind of answer that because here's a case in point where if you shorted down here, you turn right around, had the mega rally, and it closed above the bar. So my rule is, okay, if it closes above the bar that were the moving average that was lending all the support or resistance. In this case, the 20 period had been lending resistance. Okay, you can see that here. It's been lending resistance. You short and you get a mega bar that closes back above it, you get out at the close of that bar. Okay, if the bar rallies up sharply and then turns right back around and closes down here, that's actually a good thing for you. Shows that much more opportunity for potential selling, kind of like right here actually. Okay, see that? Look at this bar right here. How this market was converting to a downtrend, made it look like it was going up, closed right back down, and that led to the mega selling. Okay, so a bar that goes above your level only to turn right back down below is actually a great sell signal in this case. But the rule I use there is, if we're looking for the hard and fast, is that 1 bar close after a strong move in the opposite direction and a close above, in this case, the resistance level.